Have you ever wondered why so many skilled, intelligent traders still fail to achieve the financial freedom they desperately seek? The answer might be hiding in plain sight, and it's not what most trading gurus are selling you. Has this ever happened to you? You spot what looks like the perfect setup. Your analysis is sound. All indicators point to a profitable move. You enter the position with confidence, only to watch as the market immediately moves against you. In a panic, you exit for a loss. Then, just as you predicted initially, the market reverses and heads exactly where you thought it would, without you on board. Richard Wyckoff, one of the most profound market theorists in history, observed something critical about trading success that most ignore. The market teaches every person who participates in it, but few truly absorb its most valuable lessons. What's the greatest wisdom the market has to offer? It's not about complex chart patterns or sophisticated algorithms. It's about patience. And not just ordinary patience, like waiting for water to boil or traffic to clear. I'm talking about the kind of patience that feels like sitting in a burning building while everyone else runs for the exit. The kind that tests your nerves, your conviction, and your very identity as a trader. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the globe. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Stay with me until the end of this video, because what you're about to discover might completely transform your approach to the markets. The fatal misconception that traps most traders is the belief that constant activity equals progress. They think success comes from analyzing more charts, watching more tickers, placing more trades. Their screens flash with colors and numbers, creating the illusion of productivity. But Wyckoff discovered through decades of experience that this assumption is fundamentally backwards. The real profits aren't generated through hyperactivity, but through strategic waiting. What if I told you that doing less could actually make you more? That the key to consistent profitability isn't working harder but waiting smarter? Most traders don't fail because they can't identify good opportunities. They fail because they lack the discipline to wait for the perfect moment to execute those opportunities. They jump in too early, motivated by fear of missing out. They exit too soon, driven by anxiety over losing paper profits. And through this cycle of impatience, they slowly bleed their accounts dry. What separates the wealthy minority from the struggling majority isn't intelligence or information. It's the capacity to sit still when everything inside you screams to move. The market rewards those who can resist the constant urge to act and instead align themselves with its natural rhythm. But this begs an important question. If patience is so critical to trading success, why do so few traders ever master it? And more importantly, how can you develop this rare skill that seems to go against human nature itself? The hidden truth about successful trading is that your worst enemy isn't sitting in some office on Wall Street. It's sitting between your ears. That inner voice, that psychological pressure urging you to take action is perhaps the most destructive force in any trader's journey. I've lost fortunes not because I didn't know what to do, but because I couldn't resist doing something when I should have done nothing. If you're committed to mastering the psychological edge in trading, hit that subscribe button now. I share the exact strategies that transformed my trading journey from frustration to consistent results. When you're watching those price movements, that green candle forming, that support line holding, that resistance about to break, there's an almost irresistible urge to participate. Your mind creates a powerful narrative. If I don't act now, I'll miss this opportunity forever. This whisper, this seemingly innocent thought that says, just take a position now, you'll figure out the rest later, has demolished more trading accounts than any bear market or recession ever could. This revelation transformed my understanding of what trading truly demands. The journey isn't about mastering technical indicators or fundamental analysis, though those are important. It's about mastering yourself. Your mindset becomes the ultimate edge when you can recognize and resist that impulse to act prematurely. Richard Wyckoff discovered this through painful experience. Early in his career, like most of us, he treated the market as a machine that owed him profits for his dedication and attention. There's a common belief that underpins this mindset. If you work harder, monitor more, screens, analyze more data, and execute more trades, you'll naturally generate greater returns. It seems logical, doesn't it? More effort should equal more reward. But the market revealed a completely different reality. Each unnecessary trade, each position entered out of boredom or fear of missing out, gradually diminished both his capital and his confidence. The impact wasn't just financial, it was psychological. Behind the scenes of his trading journey, Wyckoff was learning that the market doesn't reward effort. It rewards timing and alignment. This realization hits most traders like a punch to the gut. The market doesn't care about your research, your late night studying charts, or how badly you need a win. It moves according to its own natural rhythms, and it rewards only those who have the patience to recognize and align with those rhythms rather than fight against them. The decisions that drive truly profitable trading often look like inaction to the untrained eye. While everyone else is frantically buying and selling, the skilled trader often sits quietly, observing, waiting for high-probability setups that might appear just a few times each month, or even each year. This patience isn't passive. It's an active, deliberate choice that requires tremendous discipline. Now, I want to go even deeper into this topic by examining what happens when we finally understand there are actually 3 states to the market, not just 2. Most traders recognize when to buy and when to sell, but completely overlook the critical 3rd state that often makes all the difference between success and failure. If you've ever felt that urgent impulse to trade when you should have waited, write in the comments, "Patience is my new edge." I want to know how many of you recognize this battle within yourself. The transformative insight that changed Wyckoff's entire trading career was the realization that the market exists in not 2, but 3 distinct states. Most traders understand there's a time to buy and a time to sell. That's Trading 101. But what about the critical 3rd state? The time to do absolutely nothing. This revelation might seem simple, but its impact on your trading results can be profound. This 3rd state, the state of deliberate inactivity, is precisely what most traders completely disregard. They acknowledge buying and selling, but they can't comprehend the power of patience. It's during these periods of apparent inactivity that the professional trader's mindset separates from the amateurs. The professional understands that their real edge comes from observation more than participation. They're studying the market's language, watching money flow, identifying the subtle shifts that precede major moves. Meanwhile, amateurs find themselves uncomfortable with silence. The journey through this discomfort reveals their inability to tolerate the void between legitimate trading opportunities. So what do? They fill that space with noise, impulsive decisions, emotional reactions, and low-probability trades that gradually erode both their capital and confidence. It's a form of self-sabotage disguised as activity. Behind the scenes of every successful trading career lies this uncomfortable truth. The biggest profits rarely come from brilliant forecasts or complex strategies. They come from maintaining unwavering conviction in your positions when all evidence supports your thesis, despite short-term market volatility that makes others panic. It's remarkably easy to claim you'll hold a position when the market moves in your favor. Everyone's a genius in a bull market, right? But the real test of your character as a trader comes during those inevitable pullbacks that trigger doubt. When the position you believed in starts moving against you, when the market whispers that perhaps you were wrong, when fear begins creeping into your decision-making process, that's when your true trading identity reveals itself. Wyckoff observed something fascinating about market behavior that few traders recognize. The market systematically tests your patience. It's almost as if it's designed to shake out the weak hands before making the big move. It gives you just enough confirmation to build your confidence, then retraces just enough to make you question everything you thought you knew. This pattern isn't random. It's the natural rhythm of human emotion playing out through price action. The greatest traders throughout history have been those who could withstand this psychological pressure. They understood that patience isn't merely about waiting to enter a position, it's also about having the fortitude to maintain that position when everything inside you screams to exit. This dual nature of patience represents the cornerstone of sustainable trading success. Let's examine how this perspective transforms your approach to risk management. When you truly grasp the importance of selective participation, you begin treating each potential trade with the reverence it deserves. Your criteria becomes stricter, your analysis more thorough, and paradoxically, your results improve not because you're doing more, but because you're doing less, with greater precision and conviction. If you've ever held a winning position through significant volatility because your analysis gave you unwavering confidence, type "diamond hands" in the comments. I'm curious how many of you have experienced the power of conviction under pressure. This perspective shift from seeing market movements as signals to recognizing them as mostly noise marks the pivotal transformation in a trader's journey. There's a fundamental difference in how professionals and amateurs interpret what they see on their screens. The amateur trader reacts to every price fluctuation as if it were a meaningful signal demanding immediate action. A stock drops 2% and they panic sell. It rises 3% and they chase the momentum. This reactionary approach keeps them perpetually out of sync with the market's true rhythm. The professional, however, views the market through an entirely different lens. They've developed the clarity to recognize that most price movements are simply background noise, irrelevant fluctuations that have no bearing on their trading thesis. This revelation changes everything about how they interact with the market. While amateurs exhaust themselves responding to every tick, professionals conserve their mental energy and capital for the moments that truly matter. Behind this disciplined approach lies a deeper wisdom. To generate truly significant returns, you must learn to remain composed not only when your positions move favorably, but especially when they don't. Anyone can stay calm when making money. The real challenge and the real opportunity for growth comes when positions move against you, when doubt creeps in, when fear whispers that you've made a terrible mistake. This patient composure serves another critical function. It allows genuine signals to separate from market noise. When you're not constantly reacting, you develop the mental space to observe patterns that others miss. Your perception becomes sharper, your analysis more accurate, and your timing more precise. It's a virtuous cycle that compounds over time. Wyckoff never minced words about the devastating consequences of impatience. His message was crystal clear. Trading prematurely will eventually destroy your account, not might, will. This isn't hyperbole. It's the mathematical reality of how edge works in markets. Every position you enter due to boredom, fear, or the need for validation gradually diminishes your long-term advantage. Each impulsive trade chips away at your capital, your confidence, and ultimately your capacity to recognize genuine opportunities when they finally appear. Consider this sobering thought. If only a small percentage of your trades match your criteria perfectly, say 2 out of 10, then the other 8 represent self-inflicted wounds. They're not bad luck or market manipulation. They're the direct result of your inability to wait for optimal conditions. The market doesn't need to defeat you when you're so effectively defeating yourself through overtrading. This understanding reveals the hidden truth about trading psychology. Patience isn't just a virtue, it's a strategic advantage. When you trade less frequently but with greater precision, you automatically reduce your transaction costs, minimize your exposure to market randomness, and concentrate your capital on your highest conviction ideas. The impact of this approach compounds dramatically over time, creating the kind of results that seem almost magical to those trapped in the cycle of hyperactivity. Let me share a personal perspective that changed my entire approach to market participation. The moment I stopped trying to catch every move and instead focused on identifying the rare, high-probability setups that aligned perfectly with my strategy, my results transformed. Not because I became smarter overnight, but because I finally eliminated the self-sabotage that had been holding me back. If you've caught yourself over-trading out of boredom or FOMO rather than genuine conviction, type "guilty as charged" in the comments. I'm curious how many of you recognize this pattern in your own trading. Join our community of patient traders by subscribing to the channel. Together, we're developing the rare psychological skills that separate the consistently profitable from those who never break through. To truly excel in the market requires a fundamental shift in identity, from that of a frantic participant to what I call the hunter's mindset. Think about how a skilled hunter operates in the wild. They don't run through the forest making noise, desperately chasing after anything that moves. Instead, they study their environment, observe patterns, and wait with purposeful patience for the perfect moment to act. This paradigm shift reframes how you approach the very essence of trading. The trader who moves too soon, jumping at every flicker of opportunity, is like the hunter who crashes through the underbrush. They alert their prey and return home empty-handed. But the one who waits for the perfect convergence of conditions, when price, volume, sentiment, and momentum all align, can strike once and profit significantly. Richard Wyckoff embodied this patient, deliberate approach throughout his legendary career. What others saw as weakness, his willingness to remain inactive for extended periods, was actually his greatest strength. This stillness wasn't passive resignation, but rather the disciplined restraint that precedes the most effective action. It's the coiled spring, storing energy before release. The revelation here is profound. The moments when you appear to be doing nothing are often when your most important work as a trader is happening. You're building the mental fortitude, the strategic clarity, and the emotional discipline that will allow you to act decisively when genuine opportunity presents itself. This perspective transforms periods of inactivity from something to be feared or avoided into something to be valued and protected. Behind the scenes of this approach lies an even deeper wisdom about market dynamics. The market moves with its own natural rhythm, an ebb and flow that most traders fail to recognize because they're too busy reacting to perceive the larger pattern. It's like trying to understand the ocean by focusing on individual waves rather than observing the tide. Wyckoff emphasized a truth that contradicts most trading psychology. You cannot force opportunity in the market. You can only recognize and respond to it when it naturally emerges. This insight liberates you from the exhausting pressure to make something happen and instead positions you as an observer, waiting for the market to reveal its hand. Every truly significant profit begins with this waiting process, waiting for the market to reveal its intentions, for confirmation of your original thesis, for the crowd to make the predictable mistakes you're positioned to capitalize on. This patient observation isn't wasted time. It's the foundation upon which sustainable trading success is built. The transformation that occurs when you align with market rhythm rather than fight against it is remarkable. You stop feeling like you're constantly swimming upstream, battling against forces beyond your control. Instead, you experience the power of moving with the current, recognizing the natural flow of capital and sentiment that drives price action. Your decisions become more intuitive, your timing more precise, and your results more consistent. This synchronicity with market rhythm represents a level of trading mastery that transcends technical analysis or fundamental research. It's about developing an almost instinctual feel for when conditions are right for action and when they demand patience. It's the difference between forcing trades into existence and allowing them to manifest naturally. If you've noticed that your best trades often come from patient observation rather than aggressive action, write "The hunter waits" in the comments. I'm curious how many of you have discovered this powerful truth in your own trading experience. Now I want to explore a crucial misconception about patience in trading that keeps so many traders stuck in mediocrity. Most people think of patience as passive, a kind of resigned waiting, perhaps even a sign of weakness. But the revelation that transformed Wyckoff's approach was understanding that patience in trading isn't passive at all. It's one of the most powerful forms of discipline a trader can develop. This active patience requires tremendous mental strength. It means consciously rejecting thousands of tempting but suboptimal setups that cross your screen daily. It means standing firm while others around you frantically buy and sell based on the latest headline or technical signal. The discipline to say no repeatedly is actually harder than saying yes impulsively. This counterintuitive truth explains why so few master this aspect of trading psychology. The hidden benefit of this disciplined restraint becomes evident when the perfect opportunity finally appears. Because you've preserved both your mental clarity and financial resources, you can act with absolute conviction. You haven't exhausted yourself chasing mediocre setups, so you recognize the exceptional one instantly. You haven't scattered your capital across marginal opportunities, so you can concentrate it precisely where the odds most favor you. This concentration of focus and capital creates a powerful leverage point that the impatient trader never experiences. While they're spread thin across dozens of positions, each with minimal edge, you're fully positioned in the few opportunities where your analytical advantage is greatest. The contrast in results over time is staggering. Behind the mindset of active patience lies an even more profound realization about the different types of pain we experience as traders. One of the costliest lessons Wyckoff learned, and one that all successful traders eventually internalize, is the crucial distinction between two forms of trading pain. Missing an opportunity only damages pride, while entering prematurely damages capital. This insight might seem obvious when stated plainly, but in the heat of market action, when emotions run high and FOMO clouds judgment, this distinction often blurs. Between these two forms of pain, only the latter has lasting consequences. Pride recovers quickly. The sting of a missed opportunity fades within days, but depleted capital compounds negatively against your future returns, creating a downward spiral that becomes increasingly difficult to escape. The transformation that occurs when you truly internalize this truth is remarkable. You begin evaluating potential trades not just by their possible reward, but by weighing the consequences of being wrong. You develop the wisdom to recognize that the pain of missing out is temporary, while the impact of lost capital extends far into your trading future. This perspective shift leads to a counterintuitive approach. The most successful traders often appear to miss more opportunities than their less successful counterparts. They're willing to let potentially profitable trades pass them by if those opportunities don't meet their stringent criteria. This selective participation seems like a limitation to the amateur, but reveals itself as a strategic advantage to the professional. The journey toward trading mastery inevitably includes learning this lesson, often at significant cost. But once absorbed, it fundamentally changes how you interact with markets. You develop the rare ability to watch potential opportunities without the compulsive need to participate in each one. You understand that observation is itself a form of active engagement. If you've ever experienced the pain of watching a stock soar after you decided not to enter, but later felt relieved when you preserved your capital instead of forcing trades, write "capital over pride" in the comments. I'm curious how many of you have made this critical distinction in your own trading. Let me share a revelation about patience that most trading books never mention. It's actually a double-edged sword that cuts in two distinct directions. Richard Wyckoff learned this through a particularly painful experience that forever changed his approach to the markets. He had perfectly anticipated the beginning of a significant bullish movement in a stock. His analysis was flawless, his entry point precise. As the position moved in his favor, he felt that surge of validation we all crave. But then came the moment of decision that haunts so many traders. After capturing what seemed like a reasonable profit, he sold his position, only to watch from the sidelines as the stock continued its ascent and eventually tripled in value from his exit point. The mental anguish of watching that missed fortune unfold was far more intense than any temporary drawdown he might have endured by holding. This transformative experience taught Wyckoff that patience applies in two critical directions that are rarely discussed together: the discipline to wait before entering a position and the fortitude to hold a winning position when your original analysis remains valid. The fascinating insight here is that many traders master one aspect but completely fail at the other. They can patiently wait for the perfect setup, entering at precisely the right moment, only to sabotage themselves by exiting at the first sign of profit, or worse, at the first hint of adversity. The journey to trading mastery requires developing both forms of patience in equal measure. You need the restraint to wait for optimal entry conditions and the conviction to stay with your winners through the inevitable volatility that accompanies any significant market move. This dual nature of patience creates a powerful framework for consistent profitability that few traders ever discover. Behind all these psychological challenges lies a profound truth about the market that goes beyond trading tactics or strategies. The market functions as a mirror, reflecting your character with ruthless efficiency, exposing psychological weaknesses you might not even realize you possess. This revelation completely shifts how you understand your trading results. If you lack patience in your personal life, the market will reveal it through impulsive entries. If you crave constant stimulation and action, the market will exhaust your account through overtrading. If you struggle with self-confidence, the market will expose it through premature exits from winning positions. Every psychological tendency, every character trait eventually manifests in your trading results. Wyckoff observed something that completely reframes how we think about market participation. The market doesn't actively punish traders, it simply reveals who they truly are. This insight removes the victim mentality that plagues so many unsuccessful traders. The market isn't out to get you, it's merely reflecting back your own decision-making process, amplified through the lens of capital at risk. This perspective explains why the best traders throughout history aren't necessarily the most intelligent analysts or the most sophisticated strategists. They're the most emotionally regulated. They're the rare individuals who protect their capital with military discipline and cultivate monastic patience in a world that celebrates instant gratification. Their edge doesn't come from secret indicators or privileged information, but from psychological equilibrium that most never achieve. The decisions we make under pressure reveal our true trading character, not the plans we create in calm moments. This understanding leads to a powerful realization. Improving as a trader isn't primarily about learning more strategies, but about developing greater self-awareness and emotional regulation. If you've noticed that your trading results tend to reflect personality traits evident in other areas of your life, type "the mirror never lies" in the comments. I'm curious how many of you have recognized this profound connection. This perspective shift leads us to what I consider the essence of Wyckoff's market philosophy, the concept of the decisive moment. His approach emphasized something counterintuitive yet profound. Wait patiently until the probabilities align so clearly in your favor that you can act without a moment's hesitation. This clarity doesn't come from overthinking or analysis paralysis. It emerges from allowing the market to reveal its intentions through price action, volume patterns, and sentiment shifts. When that rare moment of alignment finally arrives, and it will arrive for the patient observer, you execute your plan with absolute conviction. The decisiveness of your action in these moments stands in stark contrast to the deliberate restraint that preceded it. This dynamic balance between waiting and acting represents the rhythm of successful trading that few ever master. The breakthrough insight here is that until those perfect conditions materialize, waiting isn't wasted time. It's active protection of your three most valuable trading assets: your capital, your focus, and your edge. Each day you resist the urge to force trades is another day your account remains intact, your attention remains sharp, and your statistical advantage remains uncompromised. There will inevitably be periods when the market moves without your participation, challenging your ego with persistent whispers of missed opportunity. These moments test your resolve in ways that losing trades never can. The voice inside asks, "What if I'm missing the move of the year?" This internal dialogue reveals the psychological journey that every trader must navigate. The wisdom that anchors you during these challenging periods is simple yet powerful. Missing a trade never costs you money, but impulsive action invariably does. This perspective doesn't eliminate the emotional challenge, but it provides the rational framework to withstand it. Behind the remarkable consistency of traders who build enduring wealth lies their ability to endure these periods of inactivity without compromising their standards. They can remain on the sidelines for extended periods, days, weeks, even months, because they trust that perfect setups will eventually emerge. This faith in the cyclical nature of market opportunity sustains them through the inevitable droughts. Wyckoff recognized a pattern that plays out repeatedly in the financial lives of traders. Wealth that's acquired quickly is often lost with equal speed. The fortunes that endure, the multi-generational wealth that transforms lives, are constructed methodically, trade by trade, each one selected with patience and executed with discipline. The transformation that occurs when you embrace this methodical approach is profound. You stop seeing trading as a series of isolated bets and start viewing it as a lifetime process of capital accumulation. Your timeline extends from days or weeks to years or decades. This expanded perspective naturally cultivates the patience that most traders lack. The revelation here isn't that patience leads to occasional trading success. It's that patience forms the foundation of sustainable wealth creation through markets. It's not merely a useful trait, but the essential prerequisite for lasting prosperity. The market continues to teach this lesson daily, yet it remains the ultimate truth that most traders refuse to learn. If you've noticed that your best periods of trading often follow times of disciplined inactivity when you waited for ideal setups, drop "patience builds wealth" in the comments. I'm curious how many of you have experienced this powerful connection in your own trading journey. Now you understand why patience isn't just another trading skill. It's the foundation upon which all sustainable trading success is built. This journey of mastering both forms of patience, waiting for the perfect setup and holding through volatility when your analysis remains valid, is what ultimately separates those who build enduring wealth from those who never quite break through. I've shared these insights because they fundamentally transformed my own trading journey, and I've seen them do the same for traders who embrace them fully. The market will continue teaching this lesson to everyone who participates, whether they choose to learn it or not. If this perspective on patience has resonated with you, I'd love to hear about it. Drop "Patience is my edge" in the comments if you're committed to developing this rare quality that most traders never master. Your comment helps me understand which topics truly connect with serious traders. If you found value in this approach to trading psychology, consider subscribing to join our community of disciplined, patient traders. Each week, I share insights that go beyond typical trading advice to address the psychological elements that actually determine your results. That like button is right there if you found this perspective helpful. It's a small action that makes a big difference in helping these ideas reach other traders who might be struggling with the same challenges. For those ready to go deeper into market psychology, I've created a video right here that explores how to develop unshakable conviction in your trades even during extreme volatility. Click and continue with me there to build on what we've discussed today. The journey of mastering your trading psychology never ends, but each step forward compounds your advantage in the markets.